Good to see you, Mike.
You know, it's one of the oldest maxims on Wall Street. Investors are told, don't fight the Fed. It feels like the Fed's wanting to fight the market lately, right? I mean, the market's kind of positioning for, you know, maybe the rate hike cycle to wind down, and inflation is on the downtrend. And Fed officials really are pushing back against that idea. How do you think that sorts itself out?
Well, I think that the Fed's been behind what's been needed really the whole time in this since post-pandemic here. Most of last year it was a dove when we needed a hawk, and fortunately other policies, Mike, were hawkish. The annual growth of the money supply peaked in March of 2021. Fiscal growth as a percent of GDP peaked in March of 2021. The dollar was tightening all of last year. Yields were going up last year. Fortunately, because of those other policies, even though we had a dovish Fed, the economy, real growth, and inflation started to slow this year. Without that, we've bailed out the Fed, so to speak, with these other hawkish policies. Now that growth has really slowed to a crawl in real terms, and inflation has clearly rolled over. How fast it's going to come down is still debatable, but it's clearly rolled over. Now the Fed is hawkish as ever. And I really think that the Fed's been behind the curve, is still, and the reality is that the case for additional tightening at this point is starting to lose its gravitas. It just doesn't make a lot of sense. With real growth slowing to 0 to 1%, and commodity inflation now becoming commodity deflation, with core CPI, PPI, PCE all rolling over in recent months and decelerating year on year, with annual wage inflation rolling over. At the end of the year, wage inflation on a 6-month basis was 5.6. Now it's 4.3 in the last 6 months. I just think by the time we get to the September meeting, claim numbers probably are a little worse, growth is a little worse, inflation's a little better, and the case to really tighten much longer is going out the window.
You know, Fed officials will look at that. You say the case to tighten much is going out the window. Do you think that means that they really do change their tune that quickly and essentially just do a token raise or none at all?
I do. I think they certainly could do 25 basis points or something in the September meeting. That's my guess. But I think then they'll probably be done. I really think the key thing to remember here is certainly wasn't the Fed raising the funds rate by 25 basis points in March of this year that caused the economy to slow as much as it did in the first half, or caused the inflation rate to suddenly roll over. It was these other policies. And here's the fact of those policies. There's a 1-year lag roughly between tightening policies and an impact on the economy, Mike. And those policies have only started to ease recently. And so there's still tightening force that's going to push downward pressure on the economy and inflation all the way through the end of the year into early next year. And I would hope that the Fed doesn't just look at the current situation. I hope they look to the future a little bit and think about what's going to come. And certainly that's what the markets are telling them. Yields across the curve are saying it's time to quit easing. The dollar's starting to ease. Junk spreads are starting to ease. Fiscal growth starting to ease. The Fed should follow, and I think they will.
Well, you say that you hope the Fed focuses on the future. If you hear them talk, they're focusing on the past, because one after another, officials keep saying, we don't want to repeat the 1970s mistake of starting to get easy just when the economy slows. They feel like that's a trap. Maybe that's what they have to say, no matter what they're going to ultimately do. But you do wonder if they're locked into that idea.
You do, but you know, all of last year they talked dovish all the way into this year, and then suddenly they got really hawkish, and so they could turn again. And I think that's the catalyst under this stock market for me, is that the next easing cycle's already begun. And if you're a stock investor, do you want to miss another easing cycle? I don't think you do.
Well, market's certainly acting like it's positioning for something like that. We'll see how it goes. Jim, thanks again. Have a good weekend.